All right, everybody, welcome back to the channel. Today, we're going to talk about the main ideas of even what the channel is basically about now. Um, Everybody got big ideas, everybody got goals, and I'm going to explain to you how to get there using your skills, your abilities, and learning different new abilities and creating a method to create wealth for yourself. So, everybody got to think about order of operation and where are you storing this money? What are you doing? My basics of my channel, I'm going to explain a slow, safe process, and it's going to involve the stock market and brokerage accounts. You're going to have some abilities, and I'm going to lay out the basics of the abilities, but it's a simple process of what I'm trying to show you here, and I'm going to lay all that out right now. But the stock market is the fastest moving wealth mechanism we have access to, and retail investors are now available and can be involved in the stock market, and there's no reason not to. uh, Working guys, mechanics, plumbers, union workers, carpenters, people who just got side gigs. You could funnel money into a brokerage account, start creating a way to have assets for yourself to maneuver in the future to make bigger moves. I'm going to clip over here and show you just a couple quick examples. Look at Google. If you held Google, look at Nvidia. If you bought Nvidia and just held it, and no, we don't know, there's no guarantee, but that's why I'm saying a slow moving dollar cost average process, slow moving and safe. um, all right, so we're just basically gonna run a simple scenario. Kind of conservative stock. You basically dollar cost averaged $10 per week. That's it. Starting in 2023, you did this. And you're doing my principle of just buying it, holding it. Not a lot of risk. $10 per week. So this is the breakdown of it. Take a look. 52 weeks, $520. That's what you actually put in. And we picked Google would have been your pick for that point. The average price that you bought the share would have been $117. So that gave you an accumulation of 4.42 shares. Current Google price, $337. Current portfolio value would have been $1,491. You multiply that, you pick just 3 stock maybe, conservative, Google, SPY, the S&P 500. So look, we're gonna run the same scenario. Now this is added, so you would have had $1,500 back then, and you still haven't sold it today. You're holding on. That was a return of $186, 186% return. Again, the reason you're doing this is for the bigger picture. I'm building up these assets to be in the position of when an opportunity arises. Run the scenario again. SPY, 52 weeks, $520 put in. Purchase price $428. You accumulated 1.21 shares. You held it that year. SPY price $734. Current portfolio value $888 plus the other money. Why? You're getting maybe a down payment money together for a multi-unit. You're getting the money together to go and start a business, a tow truck business. You're getting the money together for a bigger goal. You're thinking today about what you want to do 5 years from now. Let's run that same scenario. So you buy 3. You're buying 3. You're getting one really conservative, which is SPY. You took one that was mostly conservative, which was Google. And now you're taking a little bit of risk because in 2023, Nvidia was a little bit of risk. But you picked Nvidia because you were following a couple of people. Just a couple. Nvidia, 52 weeks, 520 in, $32 per share. Nvidia, $32 per share. 16.25 shares. Current Nvidia price, $192. That would have been $3,131. You're still holding, but look at the total value of what you would have had. That was a 500% return of $10 per week. You see what I'm trying to explain to you? So, an example, you just avoid a car note. Buy a car, $2,000 car, $3,000 car. Learn how to do repairs. Every single dollar that you would have put in as a card note, funnel that money into a brokerage account. Why? Everybody wants to know why. Why would you want to do this? You need to have the money in the brokerage account to be able to make moves when a stock drops, or just the dollar cost average. One of the two, or a combination of the both. Get comfortable with brokerage accounts. Get comfortable with the stock market. Learn as you go, but move slow. Do not do anything like options or leverage trading or loans on money market accounts. Do not do any of that type of stuff. Just go real slow. Focus on learning your skills to put more money in the brokerage account to get better prices on purchase price of stock. Stocks are assets. You want to hold them for the long term. So like I showed you in that example, you bought it in 2023. You only spent $10 a week. You stopped. You could spend that money on whatever else you wanted to starting 2024 to today. It's not wise to do that. You might as well keep putting money into the brokerage account or money into, but say you didn't like that stock no more, but you didn't dislike it enough to sell it. You just held on to it. And look what happened. And then, so we get into, everybody wants to always say, well, I want to sell. Okay, look, you do not sell in 2023. You do not sell in 2024. I talk about what is the knowledge that you do need. You need to know the basics of the stock market. What are the basics of the stock market? You need to know what's a good company. You need to have one or two trusted sources to listen to about the stock market. You need to understand who you are as a person. And the reason that I have everybody starting slow is because you don't know the answers to these things until you live it. Until you live through, you dollar cost average, just like I said. And you only put $500 in. It's not hurting. But that money may have, the $500 in, that stock may go up. What type of person are you? Because the goal is to hold. I keep saying you got to hold it. So you bought it in 2023, $500 in. It shot up. It was a good one. It went up to 15. Are you the type of person that's just going to take that money and run? Do you even have another plan to do anything with that money? You're not going to buy lottery tickets with it, are you? So you got to understand who you are. And in this process, you have to take it slow until you get to that point to knowing who you are. Examples of when you do sell. Okay, so you bought it in 2023. It's 2026 now today. Opportunities come along. Everybody gets opportunities. Now you could be searching for opportunities and be too gung-ho and mess up the money. You could mess up the house's money. You don't do that. You can't do that. But you also got to go through this process and learn not to do that. But you have to be able to pivot into a better opportunity. And the only way that you're going to be ready to take advantage of better opportunities is to have liquid assets available. So you bought Google, it went up, you didn't sell, you're holding. Now an opportunity comes along. All this time, you live in a busy city. You're renting an apartment, say. You're renting an apartment, a 1-bedroom apartment. Opportunity comes along to buy a 3-unit house. And when it all breaks down, you would be paying considerably less and have more space. And all you need, for example, will be $10,000 to get the down payment. Before you saw this video, before you saw this process, before you acknowledged the truth of this, you wouldn't possibly, maybe you took opportunities and messed it up on card notes, or you messed it up on credit cards, or you messed it up some other way. You didn't have the $10,000. But because you bought Google and then you flipped over and bought Nvidia, or you bought Google and you bought Nvidia at $10 a week both, you clearly now have the $10,000 to buy the asset. And when the people at the bank ask you, well, do you have 2-year history of owning this asset or having the money already access to it, you have statements to show them, and now you can get cleared to buy the house. You have to be willing and ready for opportunities, but you have to put yourself in the position to get the opportunities. Stay tuned, watch my channel, learn more about this. I'm talking about opportunities to, you buy a house, you fix up certain things that you can do. You don't go overboard, just things you can do. Fix certain things and then feed that money back into the brokerage account. Why do this whole cycle all over again? You have money in the brokerage account. You like a stock that you heard about because you watch me and you watch one other person and you start to trust us and you decide, I like SpaceX. SpaceX dropped to $70. I think I'm going to start dollar cost averaging into SpaceX today. I'm going to get $20 per week and I'm going to let it go for the entire year. And next year, I'll decide what I want to do with that. I'm not going to sell it, but I'm going to decide what I want to do with that $20 I'm allocating. You learn to make simple maneuvers like that. That's all the stock market that you got to learn. You don't have to get in depth with it. That's it. It's simple. Follow me. I'll show you the way.